So on today's podcast, we had Patrick OMeara, founder of Inveniam. Now, I have a deep background in secondary markets for equities and options. I managed a legal group for Bloomberg, managing both trading and data as a lawyer, of course. Point is, I'm very familiar with how critical data is to the functioning of a healthy secondary equities market. But when I learned about Inveniam and what they are doing with connecting data at the edge of the network and in between with private capital markets, as well as leveraging blockchain technology to validate and credential that data, I was floored and I connected with it. Then I had the pleasure of speaking to Pat a couple of times before this podcast, and I started to realize my challenge was how to actually fit it within my normal, 1 to 1.5 hour length and not make it like 5 hours like the Lex Friedman show. Here's the thing that I'm really trying to underscore. The data that Inveniam is providing is already being consumed by large players, accounting firms like Deloitte, full service private asset valuation firms like Cushman and Wakefield. Their asset base is growing at a very fast rate. This is the beginning of something much larger. I'm really excited to bring this to you because if you are looking for a killer use case for blockchain technology, this is a podcast for you. And if this is your first introduction to Inveniam, or in any event, if you've heard it multiple times before, you are going to learn something today. So sit back and open your mind because I have a treat for you. Welcome to The Encrypted Economy, a weekly podcast featuring discussions exploring the business, laws, regulation, security, and technologies relating to digital assets and data. I am Eric Hess, founder of Hess Legal Counsel. I've spent decades representing regulated exchanges, broker-dealers, investment advisors, and all manner of fintech companies for all things touching electronic trading with a focus on new and developing technologies. So I'm excited to have Patrick OMeara on the podcast today. Now, Pat, I listened to Pat speak at the Security Token Summit a few weeks ago and was blown away by what they're doing at Inveniam. And Pat's the CEO, he's the founder, he's the chairman, he's obviously a driving force, and he's a deep thinker too. I was actually scanning his LinkedIn before, and he recently posted on Bose-Einstein condensates in space. So he's a thinking man. So very excited to have you on the podcast, Patrick. Welcome.
Thank you. It's great to be with you, Eric, and I'm excited to kind of dive into not only what we're doing, but what's happening in the economy and the broader market as it relates to digital assets, particularly on the security side, and how that's going to change how people think about storing value globally, and the mechanisms that are going to be available for people to store value, move value, and create value.
Exciting. So let's start off with your background. You've quite an interesting background. So let's lead off with that, your genesis block, so to speak, before moving on to Inveniam itself.
Yeah, sure. So I worked at Raymond James, worked at Bear Stearns in the 90s, left, started my own investment firm, ran that for 14 years. We were the globally dominant player in a niche of the market, facilitating, several $100 million a year of financing inside a niche. Grew that business to a pretty good size, 80 some professionals. So it was a nice little small business. And then I sold it, to a much larger entity who wanted to access that space. And we were involved in raising capital. We were involved in both the debt and the equity side, as well as we had an asset management arm, which was a JV between us, Goldman Sachs, and Bessemer Trust. And then I became CIO of a university. And that was less fun than I thought it would be. So left after a year and started Inveniam. And Inveniam is we say an operating system for data, right? Because as instruments are going to trade in a digital form, you need to understand, unless there's a huge referenceable data set on it, i.e. an Edgar database, you need to understand the state of that asset, so you can understand the value of that asset, so you can trade the capital stack, right? And to do that, we need to facilitate not one giant database to rule them all, but the ability for asset owners and asset servicers to credential the performance of that asset and connect it to a digital instrument. So Inveniam created that, which is the data layer that is allowing data at the edge to be credentialed and then fed into both legacy systems and smart contracts on a regular, consistent basis, which is going to allow these data-rich, low-frequency trading assets like real estate, private equity, infrastructure, and private credit to trade. And so we're that data layer, and we want to be the data layer for private market assets globally. And so that's Inveniam, that was a mouthful. Sorry.
No, it's excellent. I spent a couple of years at Bloomberg. And I obviously, when you work at Bloomberg, you drink the punch, you drink the Kool-Aid. And the story of how Bloomberg started, Bloomberg was sort of that critical link for more so obviously for public markets and debt. And it grew into so much more. Do you see parallels between what Inveniam is doing now with regards to, private assets, compared to what Bloomberg did with regards to public?
100%. There's a number of similarities that are great and a few differences that I think are meaningful. But we want to be that data layer for the private market assets globally, and as people seek liquidity on their assets, whether it's a business that they own or real estate that they own, the challenge is you have to prove the state of that asset, right? And if we can not only prove the state of that asset, but maintain proof using very simple robotic process automation, where that asset is always ready for sale, their ability to gain liquidity against that asset at any given moment, either through better forms of collateralization, borrowing, but also selling pieces of it or restructuring it, we open the door for massive liquidity into the private markets globally. And so what we're doing is, in some ways, presaging or a prefigurement of what in the market of what Bloomberg does for public markets, we're going to do for private markets, but also it's going to allow more private market assets to actually be banked, right? So one of the things that Bloomberg does is it takes public, fully banked assets, fully banked companies in order for people to gain access to that data. And what we're doing is we're allowing people in a DIY manner, or you can hire a Deloitte or a Cushman or a JLL or a CBRE or a Houlihan Lokey or a Mercer or Value Strat, who can facilitate you valuing your asset real time on a weekly, monthly, quarterly basis, and then maintaining that and proving the source data's integrity, that it hasn't been altered since moment of creation, and then extracting that data for valuation tools, waterfall tools, calculation tools, and connecting all that to a digital instrument. Once that data is flowing to a digital instrument that represents a piece of the capital stack, you're going to allow investment bankers to slice and dice and find new pools and new sources of capitals and new mechanisms to hedge and new mechanisms to collateralize. And that's when DeFi and TradFi collide in better data, right? And it's better data on private market assets. And with better data, you have all of those illiquidity discounts based on lack of marketable information and lack of good comps that are a huge discount on the private market. And so as we begin to do more and more, we're going to improve the data cycle, improve the number of comps, and remove that data illiquidity. And we have some of our private market assets. We have about 27 billion on our platform right now, live as of today. That some of their reporting data is way better than public company quality data.
Yeah, 27 billion. So, and you've seen a lot of growth in the last, that growth curve has been escalating, right?
Epically, right? We're 6 years into the process, and it took us, 4 years to build the core software, get the IP, clear, make sure that the data architecture was fully functional. We're live on many, many different chains. We tell people we're chain agnostic and chain promiscuous, right? Because the goal is, as chains will go down. And I recall back in the 90s when I was managing tech stocks and I was at Bear Stearns, I could manage tech portfolios and I was looking at tech stocks. I could tell you the difference between Northern Telecom and Owens Corning fiberglass, right? I understood reflection rate, I understood bounce rate, I understood the mirrors. How do you where where the light is traveling through the fiber optic cabling. Today, not only does nobody know, nobody cares, right? You don't think a minute about what fiberglass is in the ground underneath you because it all just works. We think the layer one differentiation is going to become dramatically commoditized. And the concept that the value is going to be stored on the layer one chains is in fact a marketing ploy of layer one chain creators, right? And the concept of single threading through a chain is a lack of resiliency for corporations who want to get into blockchain. So they need a mechanism that if one layer one goes down, using a metachain, they can immediately repopulate on a second layer, layer one. And so Inveniam has the tools that allow them to repopulate and be on 2-3 chains at once with a master smart contract that can govern in a multi-chain environment, and also not just multi-chain, but multi-protocol. So it doesn't have to just be EVMs, right, or Ethereum virtual machines. Literally, how do we bridge from an R3 Corda or a IBM Hyperledger Fabric into EVM or onto a Cosmos into those? And we have not. We're still working on on Hedera Hashgraph, which is a little bit different because it uses a fundamentally different architecture. But so we're not there yet. But the idea is corporations can't be single threaded, right? They've got to have the ability to repopulate. And so Inveniam is working with a whole bunch of different chains in order to facilitate this being a resilient piece of financial markets infrastructure to commute trust in the integrity of the data, not as a data store, but as a data trust, the ability to commute trust in data, as well as the ability to trust individual entries on a ledger, right? And that's what we're trying to do. So how can we use those individual entries on a ledger to commute trust and source data kept off chain, as well as ledger amounts? And if we can do that, we're going to transform trading, we're going to transform store of value, we're going to transform collateralization, we're going to transform securitization. I mean, it's pretty epic when you start thinking about the ability to trust data at its source and have real-time surveillance of an asset by a security. When that happens at scale, first off, 2008-9 never would have happened. Right? When you have somebody who's writing a credit default swap and they're pricing the credit default swap that they wrote to you, and you can see that the underlying assets are deteriorating, yet the price isn't moving because they're saying, well, there's no bid on the other side. Like all of those shenanigans gone. Do you know what I mean? All of that latency period between a servicer seeing something bad, maintaining that in their book to hide loss so that they can maintain the health of the overall trust that they're servicing, all of that's gone. Do you know what I mean? So you're not going to see 150, 180, as in some cases over 360 days of latency of bad data being fully reported because a servicer in the middle is using their own book to cushion the lack of payment. So when we have real-time surveillance, for good or bad, the data will be out there.
Right. And there's a lot of rent extraction in opacity, right? So, and certainly what you said also about the business continuity, it's an interesting perspective because, you don't hear it a lot, but it's clearly true from an institutional perspective. business continuity is required by regulation. If you're a broker dealer, you're regulated by the OCC, you're regulated by the SEC as investment advisor. In every single case, you have to address business continuity planning, and part of that is data availability, high data availability. Because if your data is down and you have bad information, then that is a business continuity risk. So obviously,
and every major global institution, it needs their what's called SOC 2, right, which is policies, procedures, controls around how data and how capital is moved inside their organization. It's a risk management tool. Everyone needs their SOC 2 to extend all the way down to the level of the processing of the data that is on chain, right? And so this is one of the reasons why some of the permissioned chains work, right? And there's adoption. Why? Because they can wrap it all within their SOC 2 umbrella, right? That it also, a lot of people use Hyperledger Fabric because they don't have to deal with the custody in the wallet, which is the thorniest part of the problem, right? And because they don't have a wallet and they don't have a custody situation, they can wrap their SOC 2. So they say, I'm going to use Hyperledger Fabric as my training wheels, right? And people are saying, oh, why don't the big institutions do it? Well, because the big institutions can't get all the way down to their SOC 2 to extend to both the smart contracts, the nodes, and the data elements themselves. Well, we facilitate node and data element, and OpenZeppelin has a really cool new product that allows you to wrap SOC 2 around a smart contract. And, so us with OpenZeppelin allows a corporation, a real financial organization regulated by the OCC, regulated by whoever, right, can actually push their SOC 2 all the way down to the furthest element, which means they can engage in digital securities. And at that point, the exchanges, whether it's ICE, whether it's NASDAQ, whether it's LSEG, whether it's Euronext, whether it's SGX, ADX, ADDX, all of those guys have the ability to say, we can now have these things trading in a distributed manner on an ATS because the participants are not just family offices and small broker dealers. Small broker dealers do not have SOC 2 requirements. You know what I mean? But the fact that we can reach SOC 2 all the way down to the data element, the node, and the smart contract allows that to exist on a true permissionless chain.
Right. And I'm going to predict.
Sorry.
What's that? Yeah, no. I predict. I mean, listen, I'm this podcast is all about going down deep, right? So, I certainly predict that this is going to be a case of gradually then suddenly, because once you have enough institutions adopting this, it is going to be impossible for you to be an institution that's regulated and not to adopt it. Like, you will not have a valid excuse for not having that, the ability to go down, not just from a SOC 2 perspective, but just from certainly from a risk management perspective, from a business perspective. But, boards and regulators are going to say, well, why don't you have this data? Risk managers, why don't you have this data? Everybody else has that data. So, it becomes something that just becomes embedded in the system at a certain point.
Yeah, the regulatory tailwind, not headwind, the regulatory tailwind around transparency and observability of data inputs is massive, right? So Gensler with Form PF, we're asking for more data on this, and they want, in a market dislocation, they want within 24 hours an updated Form PF to be submitted to them. It's Form Private Fund, right? So if your large fund has had, there's all sorts of different criteria, more than 25%, 35% market correction, you have to file that. The average hours it takes to fill out a Form PF is 84 hours. So if you have to do that in 24 hours, right, you have a team of 5, 6, 7 people doing nothing but filling this out. And it is a Chinese fire drill, right? And it's just everybody's rushing around trying to figure out what they're doing, right? And they go do that, or I should just say fire drill, excuse me. And, as you drive to that solution, the ability to utilize Inveniam to use robotic process automation, hit a button, and your form PF can be updated literally in minutes because you've already instrumented your data to be delivered real time into that tool is a lifesaver. And when we come into entities that are buying from Inveniam today, we don't talk about blockchain. We don't talk about layer one. We don't talk about layer two. We talk about observability of inputs, better data, better ability, better accounting treatment, moving assets from level 3 to level 2, ASC 820, and better regulatory capital. And we do all of that. People buy, and then we say, okay, we're implementing. They've signed all the contracts. We say, which chains do you want to be on? And they say, whoa, this is on blockchain, right? Like they have no idea. And Oracle doesn't sell SQL databases, right? They're selling enterprise solutions that deliver operational benefit. We are selling regulatory capital release. We're selling accounting treatment, better data, and real-time marks on your assets. And that's what they're beginning to go from. Okay, I'll try this with one asset, two assets, and those they're larger assets, 50 million, 200 million, right? 250 million. Those are typically our POCs. And then now what's happening is literally we're going from moving from POC that they say, I love this. Let's go live with this portfolio. And the portfolios that are coming in are 2 million, 5 million. And so we went from 700 million in August. We added, we kind of went live after our Series A in a big way. And then we added $1 billion in Q3, $1 billion a month in Q4, $1 billion a week in Q1. And we have over 130 billion in addition to the 27 billion that's fully on platform today that we're processing in Q2. And so
wow,
it's just shocking the volume.
That is crazy. Although not surprising. I guess you're already in the suddenly phase, or it seems like it.
Well, yeah. So we're starting to get these big movements, right? And we're at various stages of it, right? Where they say, okay, I've identified this asset or this pool of assets. And for us, they're starting to get bigger and bigger, 16 billion, 17, 30, 60. Those are kind of our 4 big bites that we have right now, where we have existing users who are in POC or they're live and they've now identified the assets, and we're going through, and the onboarding of that is difficult. And we were very worried about the technology and operational onboarding. But what's really been the big thing is the legal, because these assets are typically in portfolios in many jurisdictions around the world. And what we're having to do is build the templates. And that we're finding that was the weakest part of our expansion of our business, is that we didn't anticipate that as well as we should have. That the contracting of these assets in multiple jurisdictions was as strong. So we're having to beef that up. But it really is a it is a you build for 6 years something, and you're still surprised when it happens. Do you know what I mean? Like we're running. It's going to happen. Then it happens, and you're still surprised, right? Because it's happening at a scale that's epic. And these are the largest financial institutions, sovereign wealth funds, and fund administrators in the world. We're not talking about dealing. We're dealing with, and we land a new client, right? You land one of these big new clients, and it'll take a year to land them, and then they start to give you little bits, and then the spigot gets turned on, and they have the ability to onboard. Many of them are multi-trillion-dollar entities.
Right, and the sales effort starts to get a lot easier at that point, because now it's just getting into queue, right?
Yeah, right. Exactly. It's like we have a SKU, right? That they say, "Ooh, and what's happening is the portfolio managers are the ones who are the buyers, because somebody in their portfolio of assets, it has better data, and they're like, where are you getting that data? And they say, oh, we use this Inveniam tool. And so the portfolio manager goes to their ops guys and says, I want that. Their op guy goes to the other one and he says, yep, here it is, boom. And so we're in one large, one of the largest asset managers in the world, and we we got one portfolio manager and who was trying us, and a couple people were asking him about it. So they hosted a little session. We came in, there were 4 portfolio managers. They all did it at the end of the session. All 4 said, I want to be trying this. I want it live on my system. And literally it was just a boop, and versus, it was a, so now we're onboarding those assets, right? One portfolio at a time.
And what was it they say about data? It's like, when you have data, what's the one thing you continue to want? More data.
Yeah, more data. Yeah.
The more data you get, the more data you want.
Exactly. And unringing that bell where they stop, right? Or they say, oh, listen, we're going to go back to getting a PDF, and the middleware is a junior accountant and a spreadsheet. And that's literally middleware right now. And we're going to give it to you, but it's never going to be in the form of a JSON file automatically feeding into your Adapar or into your eFront, right? Which is their tools that they use to manage their portfolios. But once they have that in eFront, they don't ever want it to go away. You know what I mean?
Right.
Like they and the concept that they're going to have to go back to a book on a shelf and start looking is crazy for them.
Yeah. So now sort of talking about the primary targets. I know initially you were talking a lot about real estate. Real estate is obviously a compelling use case. Oil wells, utilities, agriculture, I think is probably a very interesting one, as well as insurance. But you tell me. I mean, I've been listening to a lot of what you've said, but what are the ones that are starting to emerge the strongest demand for?
Yeah, data-rich, low-frequency trading assets are where we go, right? Where we can facilitate better information. And we use an analogy of high-yield bonds. When high-yield bonds went from level 3, an illiquid asset, to level 2, a marketable alternative, and all the big institutional owners, the big LPs, were saying even though every security package and every underlying asset in a high yield bond is different, there's enough correlation, and they use what's called ASC 815, right, for comparability. They said there's enough correlation that we can say there are in-party marks to move this to a level 2. FASB said, yep, we're with you. And high yield bonds went from level 3 to level 2. And when that happened, they literally, the market grew 10x, trading grew 100x, right? And what we're doing is the exact same thing, where we're providing observability of the inputs. That's been the big obstacle. We feed that in, and with these in-period comps, we're getting real estate, which is huge, right? Massive. Infrastructure assets that would typically be marked once a year, once every 3 years. And this is huge. This is ports. This is toll roads. This is airports, where the development time for these is so long that many of them die along the way, right? And so it's a massive economic push, because the cost of failure is so great, right? In an infrastructure play. And what we do is, with more comps, better data, more frequent marks on those, because we're streaming data live directly into, using this robotic process automation, directly into the valuation tools. People like ValueStrat, one of our partners, one of the largest valuation agents for infrastructure in the world, refineries, things like that. They can start to put marks on it based on performance. Well, with that, not only the owner, but third parties with permission can have access to that data, and that allows them to plan their own infrastructure asset in a much quicker data environment. They're not having to do new studies every single time. Does that make sense? And so, yeah. Infrastructure, private equity on larger assets. So not kind of venture, but private equity, and then private credit. And you just take those 4, right? And you're right, it can go to a million other places. But those 4 right there, I mean, you're talking hundreds of trillions of dollars of addressable market. And Inveniam, we're a data player, right? We get basis points or part of a basis point annually on the value of the asset, right? It's a we're a data player. It's a small amount, but we're dealing with big big assets. But once they start, they're on the system, they're getting that marks. And this is going to lead to good data from the edge, anchored to a chain. There's that data extraction pushed into oracles that are going to speak into smart contracts and legacy systems, with chain linked and block portal, one of our companies, that we then push into, these computational systems, smart contracts, or legacy systems that then connect into and inform the digital instrument. And that digital instrument, if it's a security, it needs to constantly be updated with a flow of data about the condition of that asset, because real estate asset, infrastructure asset, they might only trade once every 8, maybe once every 20 years. But if you're getting good marks every month on the value of that asset, you can value that capital stack. We're going to start seeing 2 and 3 trades a year, right? And it's not going to trade like IBM, but 2 or 3 trades a year on a bulletin board environment. Big exchanges now have the ability to have massive additional listings, that's their business, right? ICE, NASDAQ, they want more listings, and the closed-end funds, interval funds, infrastructure assets, large single asset listings. LSEG stood up their single asset listing service, several years ago, and they don't have traction yet because the data was the big problem. Now that we can start credentialing and having these marks by third parties, even though there's no trading in that, you're going to start to see big assets, iconic assets. I've used this as a complete hypothetical, but the things that you would think about, right? The Gherkin, the Shard, all those big buildings in the UK, right? That you're going to see their capital stack listed, not as a corporate, not as a piece of an exchange, but where you're going to be able to own that. And when that happens and you start to see individual buildings, you're going to see the future of how CDOs and CLOs are built is going to completely change, right? Because you're going to be able to own pieces of individual buildings. You're going to be able to construct your own, not just own a slice of a trust of the 8 buildings Eric was able to put into a trust, that he was able to originate, out of Fifth Third. Sorry, that was a really long answer.
I'm totally down with this. So I'm good with the long answers. And also, there's obviously the exchange space, which is huge, but there's also the growing space of on-chain lending to off-chain assets, protocols like Centrifuge, for example. And it's just stunning if you think about plugging something like this into something like that, and how it could basically, it's a relatively small market, but it could grow at the pace of what you're, maybe not at the pace you're growing at, but
and we think the Centrifuge guys and are doing great stuff, right? But let's look at MakerDAO for a minute, right? So MakerDAO, with their MIP6 mechanism, where you can put forward a real world asset to lend against it, right? And so Inveniam, we've been working with and this is all public information on the MakerDAO forums, right? And so in this MakerDAO forum, with Oasis Pro, right? I'm on the board of Oasis Pro. Inveniam's a large investor in Oasis Pro, which is an ATS, and that's that is the MakerDAO regulated exchange. It's the ATS that was spun out of MakerDAO, right? And they've done fabulous work. They have one of the best ATS licenses in the world. Pat Levesque and his team, Bob, Frank, they're just doing amazing work. They proposed a power plant in Egypt, right? And this power plant in Egypt, it's a heavy oil electricity generation plant, one of the largest in Egypt. And a third party came in and invested $30 million into that power plant to make it cleaner and more efficient. And in doing so, they said, we're going to invest $30 million in, and we're going to share 55% of the savings over a 15-year period, right, of fuel savings. Now, the way they test that fuel is literally they put a 100-foot dipstick into an oil tank, right? Because it is a national security critical piece of infrastructure for the country of Egypt. So it's air gapped. There's no IoT. There's no internet. And so what happens is somebody from the Ministry of Defense, somebody from the Ministry of Energy, somebody from the company that put it in, they all take an iPhone picture, bip, right? And they take a picture real time of the dipstick. We run a hash on that algorithm. We run an algorithm, creates a hash on those pictures. You change one pixel, we'll know. We anchor that into the payload of a block. We have a pointer to where that's stored. The pictures are geotagged, they're time-stamped because of the blockchain. And then we use an extraction tool to extract the data element, and we push it real time to Baker Tilly. Baker Tilly values that in line with the contract and puts a mark on it. That information, then using Inveniam, where you compare the hash real time, we push to a node on Chainlink that is a node in the name of our client, who's the lender, and is speaking directly to the smart contract at MakerDAO, valuing the collateral. And that collateral, MakerDAO is now 2.5 weeks ago, the MIP6 was approved, and MakerDAO is going to be lending $38 million to a real world asset with the most analog form of measurement possible, a dipstick. That data is going to be able to be evaluated and proven and tested and trusted by a smart contract. And literally, we're going to be saving somewhere between 550 and 600 basis points a year in our cost of capital because MakerDAO is doing it. That's not, hey, our collateral is a token that represents an interest in a house. This is real world data being delivered real time. Every step of the way is trusted. That node is owned by the data provider, so that they can prove that as they're speaking in that Chainlink node, as they're speaking to the smart contract, there is integrity not only of the data but of the data transmission all the way through. And you just go, that's really cool. Do you know what I mean? Like that's exceptional, right? And getting all of those steps along the way, where Chainlink had to become our partner, right? Where we had to speak and we had to work with MakerDAO and all those guys. I got to tell you, we're when you say these real world collateralization and DeFi, we're laying those foundations today for real world asset data to be processed and trusted by both oracles, in this case Baker Tilly, and we also have Houlihan Lokey, who's validating a different function in that chain, but also an oracle to a smart contract in the form of a Chainlink node that Inveniam helped stand up and is supporting a node on behalf of a third party that they can say that this data transmission is fully SOC 2, excuse me. Isn't that cool?
Absolutely. Totally cool. And it's going to be, and it sounds like you've got a lot more projects planned with MakerDAO. You consider them like a very active partner at this point, correct?
So yeah, we are Oasis Pro superstars, right? Superstars, and not so. And Oasis Pro maintains the relationship with MakerDAO directly as a regulated ATS. Everything we're doing, we're the data systems that allows Oasis Pro and MakerDAO to communicate real time with one another. And so all we're doing is helping with the technical, but the transactional work is MakerDAO to Oasis Pro on behalf of clients. And we're just making sure all the plumbing works and you can trust the data and the data inputs, right? That's our layer. But the regulated entities and the borrower and the lender, those are different than us, right? So, but the answer is, we are a major believer in Oasis Pro. It's one of the reasons we invested. I'm sitting on their board. Their regulatory structure is one that is going to be very valuable, growing in value over time. I think Gemini, the Gemini problems that exist right now, that gets solved by them buying an Oasis Pro or somebody else like that, right? And there's a limited number of those licenses out there, right? So we have ownership stakes in a couple of them, and the reason is everybody's going to need them if you're doing real world assets. You are.
Absolutely. So this is so we're 37 minutes in the conversation. I feel like we need just about 3 more hours, Pat. Just kidding. Although sort of not. So let's talk about a multi-tranche asset and what Inveniam facilitates in a, with regards to a multi-tranche real estate asset, because you've talked about that, or multi-tranches, and just how it integrates with the various the cap table, the different players on the cap table, and the lenders.
Yeah, and so the way we envision it, right, is the underlying asset itself. You don't understand the tranche unless you understand the asset, right? And you need to be able to understand the asset and prove the state of the asset. And we're not indexing all the data in that on that asset. We're just indexing the data that the owner wants to index, right? And so right now we typically operate our tool on behalf of the owner, but we've built it so that they can operate it themselves. And we do have some of the early adopters, some of the smaller ones who are more tech savvy, who are operating it themselves, where they're indexing their own data, right? And so the services component we're involved in, but where we index the data that matters that people are going to want to call upon. So think of those as like KPIs, right? So we index that data so we can prove the state of your asset. Once we do that, we feed that data into tools like Argus Upload, right? Rockport Val. You're sticking with real estate right now, but it could be Value D for private equity, right? So we directly port into them. We're live on those right now. We port into those all the data for the valuation expert. 80 to 95% of their work was data collection and data entry. That is gone, right? So the valuation expert, the appraiser, all they're doing is looking at the comparables and looking at the data and say, does this make sense? Is it internally coherent? Does something seem amiss? And I can dig deeper, and then they just click on our tool and they go to the source documentation. With all that being done, they can set much more regular marks, monthly marks. That reduces fraud. This high velocity audit function reduces fraud, malfeasance. Fraud has to be well anticipated because we're credentialing the data the moment it's created, and you can't alter it post-transaction to meet an outcome that you need way down the line, right? So what we're doing is a short interval audit. So we do this, and all of a sudden we have this really good data. We have a really good valuation. We can then port that into a waterfall tool like Cascade, and all of a sudden we can use any of them that we can see how that value is attributed to the various pieces of the capital stack. Those can all sit on the same chain, or each piece of the capital stack can be tokenized sitting on different chains. And we have a concept of a metachain, which is the data chain. Think of it like a smart order routing system, but every time there's a piece of data reporting about the performance of that asset that's going to be used in evaluation, sometimes the senior lender doesn't have the same access or rights to the data that the mezz people have, that the equity people have, that the GP has, right? And so what we're doing, or the asset owner and operator. So what we do is we literally, all that data gets anchored to a metachain, right? And then that metachain, but depending on if the information rights, then has a delegate right function from the smart contract on each of those pieces of collateral that might exist on Avalanche, it might exist on Polygon. So the mezz is on Polygon, the senior is on Avalanche, and the equity is Ethereum, right? And directly. And so literally what we're doing is that smart contract gives a delegate right function using this multi-chain wallet function that only has a delegate right, no transfer functionality. Delegate right to write that data, so that token will now have that piece of data attached to it. And once that happens, all the data is connected to those various pieces or tranches, and then they can then click on it, and their data rights, seeing the information in the original golden copy, it happens because of token-based access control. Right? So it's not just role-based access control, but it's token-based access control where different tokens have rights to different data. And if you don't have rights to that data, you can't see it. And what happens is then we're going to see these tranches go. But that metachain also serves as that resiliency function or the disaster function, so that let's say let's say we're on Solana and Solana goes down. I know this is an unheard of concept, right? Solana goes down relatively frequently, but let's say Solana goes down and it stays down. And it's down right at the end of a quarter into the beginning of a quarter when there's an enormous amount of data that needs to be marked to the asset. Even though it won't be traded, it needs to be marked. That asset must be serviced on time, or regulatorily a lot of covenants will be broken. So we can auto repopulate all that onto another layer one instantaneously. And we're live on 9 different chains. And at that point, it's off Solana onto another chain instantaneously, right? That the asset owner can dictate. And so this is how we view it. But then we also view the NFT as a mechanism that people are going to have the ability to manage their ownership in many different systems, right? In many different tokens, many different chains, and that multi-chain wallet inside an NFT is going to be the equivalent. And as you know, an electronic instrument is what you say it is, and we define them and view them similar to trusts, right? So just like a trust that you would put a CDO in that you begin to tranche up, it's your own, but you can attach AI functionality in there where it can manage if-then functionality real time. This is a whole new mechanism that credit and risk teams are going to be able to stick assets into an NFT, and they're going to say, if this happens, notify me, or if this happens, sell, or if this happens, et cetera. But an NFT is very unique, particularly if you embed a wallet into the NFT. And with that wallet, you have AI functionality and basic if-then functionality in there using a workflow, which the Inveniam tool does. And this really is the future of securitization, collateralization down the road. And so this is, when you think about multi-tranche, you're giving the ability for an NFT to hold a piece of the mezz in 100 different buildings in here, and you get notified if any of these KPIs real time are here. And by the way, that wallet can be a multi-chain wallet. When that happens, you're going to see lots and lots and lots of tranches of debt being listed on ATSs. You're going to see, think of like Bond One, if you remember, around the 2000 stages, right? When I would go buy, sell bonds, I would be going to Bond One to look at inventory and many other different people's in their central bond portfolio that were at different houses that were available for sale, right? And I'd be able to go into Bond One and see what was there. This is where a function like OMeara comes in, where you're going to have multi-chain, multi-institutional interoperability to trade back and forth in kind of a Bond One or a Bond Central functionality, but for all sorts of different asset types. So the equity will be listed, some of the debt will be listed without a market maker in a bulletin board on ATSs around the globe. And then rather than needing to wait for a whitelist for these things to trade, we're literally going to be able to, using the transfer agents, which the regulators want, right? We're going to be able to prove compliance at moment of trade, because we're going to anchor all those documents, show they were valid at that moment with a pointer to those documents at their at their place of storage, at the repository, with a hash, so that when the regulator wants to look at it anytime up to 7 years into the future, you can see it and they can prove that that was the state of the document at that moment. And we can prove it hasn't been altered since that moment. And if it does, we'll see immediately. And that's where spot audit, interjurisdictional transactions on assets that are listed various tranches and how they're held in NFTs, this is where you go. There's a lot of people working on a lot of cool stuff, and all Inveniam's doing is making sure that the data is connecting in between them. Does that make sense?
It does. It's an exciting future. And talking about sort of the market structure that supports this kind of the value that Inveniam's data stack is bringing to low trade frequency assets. I heard you describe sort of like, the whole structure. You said on one end there's the data, on the other end there's the secondary markets, but you did a much more artful job of sort of like framing the whole ecosystem that would support it from the data that you create.
Yeah. So right now, Inveniam, we have at the end of this quarter, we should have 17 entities that 6 of whom we've taken technology, spun out, birthed, given their own management team a little bit of cash, and said, giving them a tap on the tush and said, go get him, big guy. And so we've birthed 6 companies out of Inveniam that we own typically more than 50% of. In addition to that, we have 11 companies that we own minority stakes in. And all the way along from where the data, understanding in data creation, IoT sensor input collection, validation of IoT sensor to make sure it's not being spoofed, all the way down to data extraction, to chains. We spend a lot of time, energy on Metachain and Oracle functionality. We do that in partnership, and in some cases where we stand up our own companies with people like Chainlink or block portal, building these multi-chain limited use wallets that are non-custodial, but they have the ability to have delegate write function only, so that servicers can service assets all along the way to writing into computational services, partnering with people like Open Zeppelin, then connecting up to tokenization. I'm on the board of Tokeny, Euronext and Inveniam. We have 3 of the 5 board seats on Tokeny. They're one of our big partners at Euronext and Tokeny, and we're doing more and more with them, both with Euronext and we're starting to have really great discussions with Borsa Italiana, all the way up to custodial wallet solutions, to bulletin boards, regulated exchange, and then DAOs and lending and collateralization mechanisms. And so we have about 17 now. Some of them are geographically specific. So we have a partnership in Brazil, we have a partnership in India, we have a partnership in Peru. By the end of Q3, we'll have our partnership in Singapore finalized. But we're building these while we're also working with partners that are not geographic specific, but have heavy presences in Europe, GCC, and US. But it's not a single company, it's a swarm, right? And we have about 30 companies that are delivering services, and I think it's 32 companies delivering services in the tokenized asset exchange that rely on our software, and without our software they stop servicing. And what we want to do is build that ecosystem, that swarm, that makes the trading of securities in a digital form. It's 24/7, 365 on private market assets, whether it's an interval fund, a closed-end fund, or an individual asset, and we're talking about pieces of their capital stack. We're facilitating those things getting traded in a tokenized form, and that's what we're building. And so hopefully that answers your question on the ecosystem. But that's what we're building, and we think the ecosystem itself is a thing in and of itself. We're just trying to help create that community. Does that make sense?
Yeah, no, it's and I want to, I want to return to even some of those partnerships maybe a little bit later. You mentioned the term Metachain. Just just for the benefit of the listeners, could you describe, when you say Metachain, what you mean? Because I think sometimes people think about like bridging, cross-chain interoperability, but I think in your case, you're talking about creating availability across multiple chains and sort of maybe in some way looking at them in the aggregate. Is that, you tell me though?
Yeah, that's right. So we do it a couple different ways. So we began using Amazon's Quantum Ledger, right? And Amazon's Quantum Ledger is a single node ledger, which means it's not really a ledger, but it's a third-party database, right, that acts as a ledger, and we can use it to interact with multiple chains at once, right? So we can use that single node ledger where we're the as the operator of the AWS node. Amazon's Quantum Ledger is a perfect metachain where we write to one chain and we can auto-populate that data onto as many as 9 additional instantaneously, right? And so think of it, and that's that smart order routing system. Meanwhile, we went, and I don't know if you recall, almost 2 years ago now, we bought the assets of Factom Inc., right? And Factom was one of the very early chains, right? August of 15. So 3 months after Ethereum was launched, they were out there for quite some time. They were far more valuable than Ethereum. And then because of some bad corporate structuring and shareholders who kind of choked them out and didn't allow them to evolve in a quick manner. And this is where, when you have bad ownership, it matters, right? That it didn't allow them to evolve at the speed that this market evolves at, and so they died. We bought all their assets. So some of the founders came and joined with us, and we have redone. And so there's a hard fork coming. Factom and all the factoid holders have already approved it, and they're going to hard fork into a new Accumulate chain, which is a Q3 main net. We're on our 5th test net right now. We can do between 75,000 and 126,000 transactions a second that we're doing consistently in our test net. but 75,000 is what we're talking about real time. And what this does is if you talk about data intensive assets that people want to go do, they need that high volume ability to do so. And literally the ability to write then to multiple chains at once. So people are going to be able to use Amazon Quantum Ledger or Accumulate, but Accumulate has a whole lot of other functionality. They have a scratch pad functionality where you can do off-chain proof of computation in the scratch pad that then gets hashed and attached to the trade. But that actually dies other than the hash and the pointer to the actual computational elements. So it can be recreated at any point in the future, but but you can't reverse engineer what the data elements were without access to the data that the pointers point to. So the scratch pad element is very good in complex transactions and complex servicing of assets in multi-party computation. So think ISDA, collateral balancing, things like that, right? So in this, we're literally creating a really cool metachain that is permanently a layer 2 chain. It's never going to compete with a layer 1. It's meant to be a universal interface with every layer 1 chain that's out there, so that when you're a big corporation, your first interaction with the chain would be Accumulate, and then you can auto-populate that data to the other chains where the tokens actually exist. Does that make sense? And so that's what we mean by Metachain. And we've got some great cryptographers, we've got some great developers, and that's a Q3 launch on mainnet, and it's transformational. But as big asset servicers look at interacting with the chain, they have to be certain of cost, and they have to be certain of the ability to, if I'm going to be anchoring data to chain, A, it's got longevity, B, there's not going to be some massive escalation in cost on writing to that chain based on the value of their token. So we had to delink that function completely. You know what I mean? So that they can write at a set price way into the future. And you look at some of these administrators that we work with. So Apex, who was, they invested $8 million in our last round. They were our lead investor. They're their largest administrator for alternatives in the world. They have 2.5 trillion of assets that they administer. And they are writing dozens of documents, sometimes hundreds of documents per asset. And when we're talking about fund of funds, you might be talking about 16,000 capital and corporate notices that need to be anchored per fund of fund per quarter, right? And so that's a massive volume, and they need to be able to do it at speed using machine function. That this data comes in, boom, it gets anchored to the chain. The data extraction pulls the information they need. It auto-populates into a tool. Just so you know, that stuff's being done on Excel and by hand today, right? And so this being automated using smart contract is going to allow the administration of funds at a level that's just epically more efficient. And so that's what we mean when we say Metachain. It is a mechanism or a smart order routing system for data to individual tokens.
And let's talk a little bit.
Eric, I feel bad like that. I'm way too into the weeds.
No, again, we're all about the weeds. So this is not a fluffy podcast, and the listeners know what to expect. So the weeds is what we're about. So I wanted to shift gears a little bit to encryption technologies that you deploy. I noted the use of trusted execution environments, which is obviously good corporate practice, irrespective, and also zero knowledge proof. But do you want to talk a little bit about the encryption and the proving mechanisms that you've integrated into your value stack?
Yeah, so I'm going to talk about there's a ZK snark is a zero knowledge proof, right? And what's a zero knowledge proof, right? A zero knowledge proof is where you want to prove something where somebody is can prove what is being sought to be proven without a leakage of knowledge, right? So the example is I go into a bar and I'm with my son, and we both order a beer. My son orders a beer and he says, "Let me see your ID." He shows him his ID. He's now proved that he's over 21, but he now knows his name, where he lives, et cetera, right? And if it's my daughter, that's troublesome. I don't want them to know that information. he looks at me and he looks at the white in my beard, and that my white beard is a zero knowledge proof, or my whitening beard, I should say, right? And so it's a zero knowledge proof that I'm over 21. He doesn't know my name, he doesn't know my birth date, he doesn't know where I live, nothing about me. A zero knowledge proof is where you need to be able to prove a certain piece of information without leaking the elemental data artifacts, where somebody can reverse engineer greater knowledge on your asset than you want them to have. And so the way they do it is a zero knowledge snark, a ZK snark, a succinct, non-argument
argument of knowledge.
Right? Yep. And what we're doing is we do these things called a similar ZK raised, a zero knowledge random anonymized interaction with specific data sets, right? And so we do the ZK raised, which is a mechanism to do that. And it relies on a basic concept of homomorphic algorithm, which is basically if A plus B equals C, if you add 2 times A and 2 times B, it's 2C. You know what I mean? So it's homomorphic, right? So if you press the balloon here, it goes up here, right? That we can see this distributed function in an algebraic calculation. Well, we can use homographic algebra on both sides of a zero knowledge computation for large data sets that also allow us to do some really cool things. And we're in way early stages, right? But where you can create a spider. So let's say you're MasterCard and I'm CalPERS, right? And I, CalPERS, am buying from you, MasterCard, data on where people are buying, but you have to anonymize the data set, right? On spending, by city, by type, et cetera. I can buy those data sets. MasterCard does it all the time. I'm CalPERS. And so I get that data set from you. And as I do so, I want to know, are you gaming the data sets to me, right? Well, using this type of a ZK knowledge, I can create a spider that creates that crawls all your data, the data sets that you're pulling from, and says, is the R2 or the correlation above a certain number? And then it does. It says, I as a spider have crawled through all this data. There is no asset that has an R2 above this during this period that I saw. And so green flag. And so that's the final green flag for the zero knowledge proof. So not only is the knowledge coming across in a zero knowledge proof, but we're able to prove the integrity of it. Does that make sense? Like the data set was complete. And that's what Inveniam does. We're focused on the data set completeness. How do you know that it's integrity? And we're not innovators on zero knowledge proof. We're not innovators on encryption, while we have some really cool mathematicians and other people on our team and computer scientists and data scientists. What we're really doing is saying, how do you know that the entirety of the data set that zero knowledge proof was supposed to convey was included in the trade and the transaction? Now, what I just said is that's a future oriented statement that is not live yet today, right? But those are the kind of really cool, fun things that we're doing kind of in our, and we're not a huge company, but we have, I think, more resources than most blockchain companies. And we're able to push in partnership with some really, really cool academic institutions and large LPs as they're looking at improving their data science, right? But Eric, does that answer your question, or did I take it in a different direction?
No, it's great. I'm going to this section, I'm going to cut right here. I hear banging on your side.
Oh, there's construction in the next office over. So I'm so sorry. There's nothing I can do about it.
Okay. You can do about it. All right. Fair enough. No. It actually hasn't been an issue up until just a few moments ago. And it's just, I don't want to detract from
maybe that's the natural end point, right? Because it's the next suite and there's nothing I can do because I'm at the edge of my suite, of where our office space is. Is that okay?
Yeah, no, it's all good, and so we'll continue. I just want to see if there's a way to turn it off.
Sorry.
No worries. So with regards to integration, you have integrations with obviously a large number of front ends. Investran, Advent, Cascade, ValueD, Geneva. Are you talking about eFront? growing, obviously. Presumably, these systems, when they're from a front end user experience, when this data is made available, do they have to sort of reconfigure their front end to now display this data, because presumably this data wasn't there before, or do you find, like, what's that journey been like?
So we don't touch that, right? Like we don't get it right. All we do is Cushman and Wakefield is now delivering, instead of a PDF, using our tool, they can now deliver a PDF or a JSON file. In both the PDF and the JSON file, every data element of importance is hyperlinkable to the source documentation, and depending on the type of data, the taxonomy of the data is available, and in some cases, the folksonomy of the data is available as well. So they use our tool to deliver a JSON file to the end user. That end user receives the JSON file, and they configure it on their own dashboard however they want. Does that make sense? So what we're doing is we're giving a tool for Cushman to deliver a JSON file. Does that make sense?
No, it does. And I'll push that question a little bit more, because even though you aren't necessarily involved in how they distribute it or how they make it available on the front ends, have you had any visibility to how those are, that new information, that real-time information, how is that actually being distributed? How is it being shown to the front end users?
So we built our interface, the Inveniam interface, with the intention that the asset administrators would use our tool, but the portfolio managers would never sign into our tool, right? Like, we imagined they would only sign into their own tool, right? We have a top 15 bank in the world that has moved a number of its largest senior loans on massive assets. So think of some of the biggest buildings in the world. Average loan size, 255 million, I think, right? And so literally they're beginning to move that portfolio to us, right? And we're putting those assets, we're reporting, and they're getting real-time information. And their tools aren't ready to receive our data. And so they're getting it in an Excel spreadsheet. That's what we're populating for them, right? Which is what they live in anyways. Most of the time they live in their Excel, right? But and so their risk management tools are doing that, but then they're actually logging in to our tool. And this is where it's very cool, because we built functionality for the asset administrators to administer, if this happens, then this function, where you can build smart capabilities. But they're now building risk functionality using our work tools, that if this number is less than this, notify me. If this is this, then kick off this workflow. So they're building. So we actually have more people in our tool than we imagined would be there, right? And we're trying to, this is causing us to pivot as a company, right? We're like saying, we have to. Does the market adoption and use of our tool is different than we thought it would be? Does that make sense? We designed it for this. And so how are people interfacing it, and how are they using it? I think the credit and the risk guys are doing a whole lot of things that we didn't anticipate, which is really cool. And so, but I also wanted, Eric, I want to also not overstate where we are, because we're still in very early days. You know what I mean? Like very, very, very early days. And right. We have 9 big global clients. And then we have a whole bunch of little ones, developers who might have $100 million of assets or $200 million of assets. We have a number of those, but we have 9 big entities, and they use the tool completely differently. And we're realizing we might even have to come up with different tools, because these guys who are the smaller real estate developers, who they have one building at a time. I'll use an example. We have a real estate developer in the Chicago, Milwaukee area using our tool. And every building he does, every development project, he sets up a separate LLC, and he's got separate investors. Now, there's a lot of commonality between them. You know what I mean? Like, some people might invest in every one of his deals. Some might just invest in some of them, but each one is separate. He manages his whole business now from our dashboard, right? And he is his own administrator. And we didn't anticipate that, right? And so he wants an investor view for his guys, and we're like, oh, we didn't anticipate that. So the market is taking us in directions that we didn't anticipate. But as you know, you build something and then you let it into the wild, and it behaves differently than you anticipated, right?
Sounds like the genesis of another spinoff, if you ask me.
I don't know. All of our spinoffs have been technology oriented, right? Where we say we need this function, but that's not my business, right? And so we build the function because we don't see it out there, and then we spin it off.
So recently you announced a partnership with Rialto Markets. We had Shari Noonan on the podcast, so I definitely feel the need to bring that up. Do you want to just illuminate us a little bit on that partnership? And
sure, we love Shari. She is a professional. She's a superstar. She is super competent, and she has built something that's really necessary. And they are in a space. They're an ATS, just like Oasis Pro Markets, who I've talked about earlier, right? And and so they're two ATSs. And I'm on the board of Oasis Pro. Rialto, I'm not on the board of, but we are a lead investor the lead investor in this round, and we are helping her close out the round that she's in right now. But her license is so incredibly valuable; it's not even funny. But not only that, the value of it's just going to go up over time. But in addition to that, she is playing a critical role in the development of the infrastructure for equity, Reg CF, Reg A, Reg A plus, equity listings that matter. And it's a different part of the marketplace. It is, and it's driving primary issuance with distribution. Oasis Pro, for differentiation and distinction, is not in Reg CF. You know what I mean? They're not in Reg A plus, but they're much more secondary market oriented. They're much more debt structured product investment vehicle oriented. So, but not only that, they're even if there is a little bit of overlap, we're so early in the days that the greenfield opportunity is massive. You know what I mean? Just so massive. They're never going to bump into each other. It's blue water everywhere, right?
I agree with that.
Where they are. And so we needed more partners like Oasis Pro, and particularly we need to support entities like Shari because it is early days. They need technical, financial, and ecosystem support to make sure that they've got the staying power to get through to where they're going to really start to see that flow of new business. Does that make sense?
Yes. Yeah. So
I'm a fan of Shari. Can't be a bigger fan.
Yeah, and I keep track of Rialto Markets. I mean, anybody who comes on my podcast, I follow. I mean, there's a tie. So, with regards to agriculture, I recently had an interesting podcast with Todd Eskelson talking about agriculture cooperatives, and we delved in something I've also been following is the amount of data that is now coming out of agriculture. Like he explained on the podcast, you have tractors. He goes, tractors these days, do people sit on the tractors to watch Netflix? And it's collecting all the data, soil, fertilizer, just so much detail that was, soil composition, crop yield, all this stuff is being calculated at the tractor level. Like this is your ultimate IoT device out there on the field, right? And it's just sort of stunning, actually, the amount of data that's coming out of the agriculture industry now.
Yeah, so I spent some time with RDO, which is a huge agricultural concern, and John Deere dealership. I forget what number they are, but like I think they're 12% of John Deere's revenue, and it's a massive global organization. And they gave me some tours of their agricultural facilities, right? And so I went and visited the largest dairy farm in the U.S. and they're milking 38,000 cows a day, which is just an epically large amount, right? Most family dairy farms are doing 100, you know what I mean, or 200, and they're doing 38,000. Plus, they've got a large beef herd, and the ranch itself is they denominate it as this ranch is this size compared to this state, right? I mean, it's just they're so big, and so. Looking at the automation of what they're doing, and I went into their data center, and it looks like a NASA space station, right, where we're looking at all the information they're collecting. But they literally have drones, and not the little drones, the Boeing 70-foot wingspan Reaper drones that they fly that are taking pictures, infrared pictures of their crop in order to understand pestilence as it's coming on, understand development, understand are the nitrates, are the nutrients, I should have said nutrients. I don't even know if nitrates is the right word, right? But my knowledge is so slim. But we were looking at this and saying, so it's amazing. And it's a data-rich, low-frequency trading area. And I think ag is huge. We were talking about understanding, they monitor by cow nutritional intake every day, right? And with sensors on the ear, how long they can't see what the cow took in, but how long it's spending grazing the food that it's consuming, and it's epic. I mean, I forget what it was, but they birth hundreds of calves a day with the size of their and it's just the operation. But they're also genetically, they're managing the genes of who is the parent and what bloodline it came from and the quality of the beef that they're getting out of it and the quality of the milk and whatever. And is it an F1? And is it an F2? Whatever. How do we need to do this? And they manage that. That's all centrally managed. They can't trade on it. Inveniam eventually will get there where we will allow them to trade and influence the market. But right now, all they're doing is using that data mismanagement, not mismanagement, data mismatch, right? That asymmetry to their own economic benefit. Eventually, they're going to become a data and a technology provider to every other farm in America, and everybody's going to be able to trade on that type of data, and that's when Inveniam's there. But right now, that data value proposition is localized. That ability to trade on that data is where Inveniam will come in, and I think we're a year or two at least away from that. And there's only so much I can do in a day. You know what I mean? Like,
I agree.
I was just like, when I went and I did the tour, I was like, this is amazing, but let us do one thing at a time. Do you know what I mean? Yeah. But I will tell you, walking that farm, you saw something they're delivering. I forget what it is. If it's 6 million or 60 million gallons of milk a day to Tillamook, right? Like literally Tillamook built their factory on their farm, right? Just to take so that they could be the offtake of the milk. And you just go, it's farming at an industrial scale that's epic. And they use that data asymmetry to their benefit. That's going to transform the ag market in America to help every farmer down the road. But you're right. The tractors. It's amazing how data's coming into there. It's amazing, right?
And the topic of the podcast was actually talking about agricultural cooperatives and what they can teach us about DAOs. But I have a fascination with this notion of data cooperatives. So, like you have this large concern which can do this, but increasingly, the importance of that aggregated data, the value of that aggregated data, even within a cooperative structure of smaller entities, collecting as part of the whole. I mean, that's how you get market power. That's how you're able to monetize, leverage, really utilize that data, which is just, again, it's an exciting space, one to follow. I agree with you. I don't think it's like, I don't think that the the train maybe, I don't think the train is leaving the station. The train is, there's a lot of things being done to the train.
It's
let's
gearing
say.
up. It's gearing up. And I
It's
agree.
gearing up.
And you know, I'd love to connect up with the guest that you had. So if that's an introduction you could make, I'd love it. But I gotta tell you, it's a real data that's not in a centralized database, but where you control your own data and you allow other people to use it, and they can trust that it hasn't been altered since the moment of creation. That's what matters. And Inveniam's all about data sovereignty. We're all about data on the edge, and we're all about facilitating the ability to socialize trustable data.
Excellent. So I know we're actually at time, and that seems like such a powerful way to end it. But before I actually end it, we've covered a lot. I actually feel, is there something that I've sort of missed, question that I should have asked you that maybe we should, that we should cover before we break?
You know, I'm gonna hit a hot button for today, right? I'm gonna hit a topical issue, if I can. There's a lot of motion. I'm in 2 weeks. Last week I was in Abu Dhabi and Dubai at the UAE, interfacing with a lot of the folks there. 2 weeks I'm going to be in Zurich. In July I'm going to be in Singapore. And the U.S., from a regulatory standpoint, is creating uncertainty. And there's an arbitrary nature by which enforcement is a form of policy creation. That's problematic. And we as a community must come together to speak collectively about digital innovation and responsible digital innovation. And I really want to cheer the new proposed legislation and what's happening and seeing.
And do you mean like the Loomis Gillibrand proposal?
Yeah, FRIA, yeah, and that just came out, and I briefed some members of the Senate Banking Subcommittee a month ago, right, 2 months ago, and super basic questions. Explaining concepts, diving into concepts. How does this translate to the U.S. market economy? How does this affect the Fed? How does this affect the dollar? How does this affect trade? How does this affect SEC, CFTC, right? Really good informal sessions where they could ask basic questions to make sure that they understood. And I will tell you, A, I love that they were doing it, but B, we've got an education effort in front of us. We've got to talk to people. We can't just be talking into our own echo chamber, right? We've got to educate. We've got to talk about the benefits of it. We can't let the narrative be lost that this is Silk Road, ransomware are the only ones who benefit. And I understand why people are pushing that narrative because it's in their economic interest to do so. And we've got to as a community speak more effectively, or the U.S. Is being left behind because of regulatory ambiguity. And I will tell you, we just registered 2 corporations offshore that were created, birthed right here with U.S. money, and they were sent over there because there was a regulator willing to regulate them with clarity, right? And that's what we wanted. We don't want no regulation, right? What we want is regulation with clarity that we can say, we can prove we're in bounds, we're following the law, we're doing exactly what we need to do. But when you use enforcement as a form of policy creation, dude, that really sucks. You know what I mean? And so I want to encourage us as a community. We've got to educate, and we've got to engage with the lawmakers. It's a real thing, brother.
I've spoken a lot about this on the podcast. When I see like Loomis, who's a Republican, and Gillibrand, who's a Democrat, that is something we want to encourage, that cross aisle, because the worst thing that could happen is this becomes a partisan issue, that it becomes, that crypto is like you're Republican, if you're crypto, you're Democrat, you're against. Like, so much of this country has just sort of fallen along these dividing lines that are
ridiculous,
are stupid.
Yeah,
and yeah. So
right.
anyway,
so let me respond to that real quickly. At our conference that we had last year, it's a small conference. There's only 250 people, but Mayor Suarez and Mayor Adams came, and they engaged in an hour-and-a-half dialogue back and forth about what we're doing. The U.S. Conference of Mayors under Francis Suarez, who's the new president, they are engaging. They had a special session. They had 2 special sessions just on crypto. Atlanta, the Atlanta mayor, who's a Democrat, is engaging dramatically with a literacy program, because those guys transmit money via Venmo and digitally, but also via crypto, more than they use banks, the underprivileged do, and the underbanked. And he's an advocate of it. Adams is an advocate of it, right? And the thing that we need to do is we need to understand that this is a bipartisan issue. This is an economic infrastructure issue. This is not anti-regulation. This is within regulatory frameworks, providing innovation, but it is going to have winners and losers. And some of the losers are people who have acted as a middle function rent seeker for decades or even centuries. If they don't evolve, they will die. And that's what innovation is supposed to do, right? Bring about efficiency. So we need this bipartisan stuff. I could not agree. I could not agree more. What's the fella's name? The Pennsylvania congressman, who's a superstar, Littleton or something like that. Do you know who I'm talking about? It's bad to bring up something that you don't know on a podcast.
We'll edit that part out.
yeah, good. Edit that out. I love listening to him talk. He knows what he's talking about, right? It's beautiful, right?
Not Emmer. You're not talking about Emmer. It's not or Toomey. You're not talking about either of those guys.
No,
right?
not Toomey. No, and he's a Republican House member. I'll figure it out. Yeah. I'll figure it out from Pennsylvania. Right. At any rate, hey, Eric, it's been great being with you, brother. Thank you for having me on.
Excellent. Thanks so much.